Lecture number 5, Trade Execution Process. Before understanding the basic rules of market, people are just jump into the markets to make a quick profits. Before jump into the market, we have to consider and understanding well what is the trade execution process in markets. To know the trade execution process in depth, we have to understand the process. We divided the trade execution process in 4 stages. The first stage is about source of information. When an investor or a trader open a demat and trading account, he is desperate to trade in the markets. That desperate trader want information that is freely available in the markets to get decided and enter into the trade. He got various informations about the company through TV channels, stock markets, website, advisory calls, friends and relatives. By getting the information from various channels for the same company, he is being convinced or influenced for that stock. This is the most common stage of stock filtration for common traders. After the influential stage, they entered into the stage of sentiment. When the traders check price on the next day of market opening and stock is moved according to the influences, then this influence is converted into sentiment. This kind of sentiment is called as unanalyzed sentiment. That means the information that is influence you cannot be analyzed for the trade execution process. Then the trader is enter into the stage 4. After creating an unanalyzed sentiment and the stock price move on the market opening, this sentiment is converted into trade execution. When sentiment hits traders, execution will be done in a fraction of seconds. Do you think that what will be done after that trade execution process? After the transactions, the trader need 3 answers for the questions. Do you think that what has happened after the trade execution process? After the trade execution stage, the trader is think about stage 5th. That is, he asks questions from various people about the trade. Whether this trade we can hold it or we can sell it loss or profit or keep patience. These kind of questions will be round in their minds. We categorize these questions and these questions will be answered by the next 3 steps. The first, have you ever decided that what is your trade plan before entering into any trade? That means entry, exit and stop loss. Have you decided your entry, exit and stop loss before entering into a trade? The answer is no. The next question, what is the percentage contribution or the amount of contribution per stock for the transaction? Have you done that stock trade for 50% of your portfolio or 10% of the portfolio or 5% of the portfolio? That means you are not following the portfolio allocation process and the leverage management. The third question that is asked, what is your risk reward ratio on that trade? Is it 1:2, it is 1:3 or it is 1:5, or the trader can get that trade on 1:1. So finally the answer is, if you enter into any trade, you must consider the last three questions. If you get answer of all three questions, you can easily enter into a trade. That will increase your confidence, and trades are considered to be the analyzed basis. I give you a shocking data. 95% of the traders have not considered all three main points before trade. That is trade plan, risk reward ratio, and the portfolio allocation and leverage management.